Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news in the mining and exploration space. Joining me today is Nicole Adshead-Bell of Cupel Advisory. Nicole, welcome back to Kitco.
Thank you again very much for having me, Paul. I hope everything is going well.
All going well, prices are coming back, all swimmingly. Bumpy times in the precious metals prices with a 10% pullback in gold. The US Federal Reserve has also just announced a 0.25% cut to interest rates. Gold seems to be bouncing back, Nicole, but will prices now stabilize?
I think we were due for a pullback, and I think in any bull market, everybody has to remember, and we are in a bull market, everybody has to remember that it's not always just a straight line up. And in fact, when it gets a perpendicular straight line up, that's normally a sell signal. So I think we've got a healthy pullback, and frankly, personally speaking, I find it easier to make investment decisions or deploy capital in this kind of environment than in some of the, I suppose, short-term momentum that we've seen over recent months. And so I think prices, they may go down a bit further, but I definitely think that we're in a long-term upwards trend over the next couple of years.
Will you explain that to me a little bit more, Nicole, if you can? Why do you find it easier in this environment? Prices are coming down. A lot of stocks have seen, quite significant falls related to that. Why is this perhaps an easier environment or a better environment for you to make investment decisions?
I'm super cheap and I like a bargain, and that's not necessarily always a positive thing. So sometimes if you get too hung up on deep value, for example, in the mining sector, that value never expresses itself, because if there's deep value, that may be something, and the asset might be fine, but it's a management team that is not capable of extracting that deeply embedded value. And so I would say personality wise, and also now being of the age of seeing a number of bull and bear markets in numerous commodities, this kind of environment, it's just easier to be rational, I think, without the overt froth of a chart that is going up every single day. And so I've had my eye on a number of, I suppose, junior companies. Everything is run pretty heavily. And when you step back, you go, nothing has fundamentally changed with these companies. What you've had is a short-term retraction in price. And when you see the underlying price momentum that we've seen over recent months, often share prices kind of get ahead of themselves as everybody's rushing in, and then you get that slight fear factor, and those people that have been exposed in the sector that just haven't bought in recent months, that are perhaps the long-term bulls like myself that have had positions since for a number of years, you can get a little bit, I think, scared because you've lived through these up and down cycles, and sometimes you see this profit taking that's also being driven by fear.
Okay, so it sounds like you're buying into things you've already had your eye on, and you're sort of buying the dip. Okay,
yes.
So November starts this weekend, and that means in Canada, at least, we're getting into tax loss selling season. How do you adapt, adjust for tax loss selling? Because as we sit here right now, you've no idea who's going to get sold off and who's going to go down. And as you say, things haven't fundamentally changed, but some stock will be hit more or sold off more than others.
Well, normally tax loss seeing, you need to be very, very cognizant of that. And normally the best time to buy is in the last week of December. In markets where you've had underperformance, I don't know, there's very, very few companies out there, particularly in the precious metal sector, that are trading at a lower valuation than they were at the start of the year. So I don't think that tax loss selling will have as big an impact, because most people won't have losses that they can monetize. It's been a pretty spectacular year, let's face it. So unless, I suppose, you bought in the last couple of months and you've got a downdraft and you want to take advantage of that. And so having said that, maybe there's some people out there that have come in a little bit late to this rally party and will choose to take some profits on that. But definitely you do have to be aware of it. The way that I look at it is, in this sector, you generally need to take a little bit of a longer term view, and I feel pretty positive about the gold price longer term. I'm taking a structural view on the kinds of companies that will outperform over that period. Frankly, you don't have to be smart in a bull market. You can buy anything and it goes up. But I think that being too cute about when you're trying to buy and when you're trying to sell, you will never pick the bottom and the top. And if you do, it's normally just happenstance. It's basically taking a theme, I make an investment decision, and I'm very cognizant of the risks, and I'm willing to take the dips. I think panic buying and panic selling, that normally doesn't result in longer term outperformance.
Okay, well, thank you for that. Let's carry on with gold. The World Gold Council issued its third quarter gold demands trend report, and that showed that quarterly gold demand reached 1,313 tons, or about 146 billion US dollars worth, the highest quarter of demand on record. Growth was driven by investment demand, which increased 47% year on year and accounted for 55% of overall net gold demand. Gold ETFs added a further 222 tons, with global inflows reaching 26 billion US dollars. Year to date, gold ETFs have added 619 tons to their holdings. Central banks also continue to pick up the pace in the third quarter, with net purchases totaling 220 tons, which is up 10% year on year. Total gold supply reached a quarterly record as well of 1,313 tons, with mine production up 2% year on year to 977 tons. Nicole, all this is very well and good, but will these type of trends, buying trends, are they going to continue?
Absolutely. It seems to me that when you've seen, whether it's world famous economists or pundits that are speaking on various shows, not just in mining, but generally in the finance news, it's like there's been a sudden realization that we're all exposed to fiat currencies and that there is a significant amount of risk in that. And to some degree, I think it'd be quite scary if the average person woke up one day and actually understood that their currency isn't really backed by anything. It's backed by faith. And so I think that trend and that realization that most countries are materially in debt, governments are printing money, there is still a lot of inflation. Speaking personally, I just find when I go out to the supermarket, for example, I love eggs. Can't believe how expensive eggs are. So there's still a lot of inflation out there. There's a lot of uncertainty. I think this is just the environment when there's all these moving pieces. Nobody really knows what's going on. That gold will outperform. And I find it fascinating that 18 months ago, you were seeing articles about the death of gold again. And then here we are back at the same spot that we were in the last bull market, where people are waking up and looking at this thing called gold and seeing this massive momentum in the price movement, and then thinking, well, I need to have some exposure to that.
Okay, well, that's encouraging to hear. Staying with gold and looking at gold stocks, Perpetua Resources, received a $180 million investment from Agnico Eagle Mines and $75 million from JP Morgan Chase, with a financing coming days after the company announced that it has broken ground on its Stibnite gold project in Idaho in the USA. Agnico bought a 6.5% and JPM a 2.7% stake. Stibnite is expected to produce about 300,000 ounces a year of gold and over 450,000 ounces a year during its first 4 years, as well as a considerable amount of antimony. Perpetua was formerly called Midas Gold, and during those days, Barrick Gold held a 19% stake until 2022. Nicole, Agnico is flexing its muscles and taking a stake in a US gold project that is now under construction. What did you make of this transaction or this financing?
Look, Agnico, you look at any period of time, essentially, Agnico's always been a great outperformer. And what that says is that it's very good at building trust with the investing community. Agnico, and because of that trust, it tends to trade at a premium. And in fact, it almost always trades at a premium. It can look kind of expensive based on fundamentals, but it's the kind of company that investors go, I can own that, and I can sleep at night and not be concerned that I'm going to wake up and the next morning and the company has done something really stupid, like decide it's going to focus entirely on copper. So I think that Agnico is a very clear strategy. We're in the market that growth is it's not necessary, but investors are demanding growth. And there's very, very few assets out there that would move the needle for a company like Agnico. And Stibnite is a great asset. It's a long-lived asset. It's got a very strong production profile. Its key hurdle over the last 10 years has been the lag in terms of trying to get Stibnite permitted. So I think that makes a huge amount of sense that they're making this decision. And also, Agnico have a pattern. If you look at their investing in corporates over the last 25 years that I've been in Canada is they also make investments, and that doesn't necessarily mean they're going to take over the company. I think they're very, very rational in the way that they conduct themselves. And so I think what this does is Agnico will have done a material amount of due diligence. They will see this as an asset that they might potentially want to own longer term, and it makes sense to take a position right now. So I think it ticks all the boxes.
Okay, and that investment from Agnico Eagle Mines, that's perhaps a rounding error, looking at their third quarter results, which we're going to talk about a little bit more about later on. They came out this morning, very, very good. But let's turn to the JP Morgan Chase aspect of this announcement. They recently announced a 10-year, $1.5 trillion security and resiliency initiative to facilitate finance and invest in industries critical to national economic security and resiliency. Stibnite has that antimony byproduct or co-product, as I mentioned. What do you make of JP Morgan Chase investing in this project? Does this signify that big money from the really big financial institutions is looking for a home in the mining space?
I think it does. The one thing I would say is big institutional money is, I don't think it's necessarily that educated about the mining sector. And frankly speaking, and we've discussed this in the past, is I think investor and corporate behavior is very, very predictable depending on where you are in the cycle. And I think at the waning stages of a bull market, or at the top of the bubble like behavior at a bull market, is when all the less educated, less specialist money comes in. And that's normally a big sell signal. I think, again, what JP Morgan has done is it's a very low risk approach. The American government has sent very, very clear signals and is putting material hard dollars to work into assets, development companies that are within their critical mineral realm. So this is not really that low risk, I don't think, from JP Morgan's perspective, because that they know that they're essentially getting backstopped by the government. And so when you see some of these recent transactions like its Trilogy, etc., the US, perhaps more than any other country, is really putting its money where its mouth is. And this move from true globalization to more of an isolationist behavior, and with governments and countries starting to want to ensure that they're securing supply of their raw materials, I think that plays into all of that thematic. And I don't think that's going to go away. So I think it also makes a lot of sense for JP Morgan.
You mentioned Agnico might be investing. It doesn't necessarily mean that the company's interested in taking over Perpetua long term. But is it odd that Agnico is investing in Perpetua when other major gold producers that are already in the US, like Barrick Mining, Newmont, AngloGold Ashanti, Kinross Gold, they're not investing in a company like Kinross? As I mentioned, Barrick was a shareholder until, I think it had about 20% until 2022.
I think ego-wise, it's really difficult for companies when they exit from something to then come back into it, because obviously they had a strategic position at much, much lower prices than it is today, and they exited at the wrong time. And I think solely because of that, unless there's a change of leadership, and obviously that has been announced. And also when you're having potential leadership changes, which is Newmont's announced, as is Barrick, they tend not to make I think strategic decisions. And I agree with you that the amount of money that's been invested is a minuscule proportion of their balance sheet or their capital available, but you just don't seem to see big changes. Kinross, I think what you do see with this kind of behavior is, and we've discussed this thematic before, is that companies tend to do what other companies do. And so I think the next leg of this market is really going to be driven by both actual M&A and anticipation of M&A. And what you tend to see is when one company does something, suddenly that strategy or concept or idea becomes more and more attractive to their peer group companies. So I don't know if there was a process, perhaps there was. You don't necessarily really know what goes on with boards and management teams, but I think that this behavior will continue.
Okay. Third quarter earnings are coming thick and fast. Agnico announced this morning $1 billion of net earnings in the third quarter. Its cash pile swelled to $2.4 billion and its debt reduced to $196 million. Newmont reported last week it didn't wow, but New Gold did this week with net earnings of $142.3 million, a 275% increase over the prior year period, as its production jumped 35% to 115,000 ounces of gold and 12 million pounds of copper for a record 130,000 ounces of gold equivalent. Higher production there led to a 31% decrease in the company's all-in sustaining costs to perhaps a sector-leading $966 per ounce. That resulted in a 73% margin, which is about $2,500 per ounce. The company's record $205 million in free cash flow helped it reduce its long-term debt as it paid down some $260 million of debt. Nicole, a very impressive performance by New Gold. Their shares jumped on the news. Why weren't Newmont's results better given the higher gold price?
Number one, completely different asset base, smaller companies. And so it's much, much easier, I think, to frankly, to manage your business when you're a smaller company with fewer assets. And New Gold has been messaging for a while. Its focus on capital discipline, its costs. So it's coming into this sweet spot at exactly the same time as the gold prices has had this tremendous run. And so I think things have worked perfectly. Timing is everything. So there's a couple of elements that are very, very different to Newmont. And Newmont has been going through this period of quite rapid change, which is divesting itself of non-core assets, starting to focus on those that it will think the most long-term value. And it's also a larger company and a beast. And I think that with these larger companies, there's just so much in terms of embedding costs. There's a lot about process over productivity. I think it's a lot harder to be a little bit more nimble and maybe adjust your approach to your business versus a New Gold. And so I think as the cycle matures, we're yet to see generalists enter en masse, but when generalists come in, they buy all the large, very liquid companies, the Newmonts, the Barricks, the Agnico Eagles, the Kinrosses, etc. And then they start to go down the food chain to get that talkiness that you can more easily generate with smaller companies, because you tend not to have the layers of bureaucracy. How I think about larger companies is they're a little bit like a government. And I think any of us that have experienced trying to deal with any government entity, that how that generally works out. Things just don't happen very quickly. So I think that's one of the key reasons to be aware of.
Okay. I want to ask you throw in a question about Barrick Mining. You mentioned, you alluded to them, and we talked about them a little bit during our comments about Stibnite. There was news out this week that potentially the next CEO of Barrick Mining will potentially look to sort of split the company in two. This was a story I was investigating a couple of months ago, but couldn't really get anybody on the record about it. The idea being to separate Barrick into good Barrick, bad Barrick, or perhaps safe political jurisdiction Barrick and more challenging political jurisdiction Barrick Gold. What do you think of that idea? Does that make sense? Will there be appetite for that, do you think?
I actually think there would be, because ironically in a bull market, the bad Barrick, or those assets that tend to have the highest degree of risk and maybe the highest capital costs, they have the most optionality or the most torque to a rising gold price environment. Conversely, they also have the most torque when things turn, and they will turn at some point. So I can see there being a strategic reason for that. For me, that strategic reason would make the most sense, obviously, if there was a true merging of safe Barrick and Newmont's North American assets. I mean, you could create this unique company, I think, that would really appeal particularly to the US investing class. So I don't think anything's going to happen until a new management team or a new leader is in place. And I think that new leader will have maybe have some fences to mend, or an approach to be able to more clearly perhaps message what Barrick is, because we've seen this evolution of being focused on copper, removing gold from the name just as everybody decides that they want to own gold. I would argue maybe that wasn't the best decision. I think the strategy around Barrick is potentially a little bit confusing to investors. And so there's this real opportunity to build a new company, actually, and just sit back and go, okay, what is the perfect company? We have this chance to build a perfect company. What does that company look like? And I would hope that the board and the new leadership team take that opportunity when those changes occur. Because I think the status quo, I don't see that as being positive in this kind of gold price environment.
Okay. Well, John Thornton, Barrick Chair, you can get hold of Nicole for a potential job opportunity at Nicole Adshead-Bell at Cupel@advisory.com. Another country that Barrick dropped the mic on and left was Guyana, and that's a jurisdiction that's really heating up. Aris Mining announced a PEA this week for its Toro Peru gold project there to produce 235,000 ounces a year of gold for 21 years at an all-in sustaining cost of about $1,300 per ounce, plus silver and copper. Aris has initiated a PFS there for completion next year. G Mining Ventures begun construction of its Oka West project in Guyana recently, and G2 Goldfields and Oh My Gold are also rapidly advancing their projects. Nicole, it seems there's going to be a lot more gold development activity in Guyana. Why do you think that is?
Number one, the geology. It's unbelievable perspective. I would say it's underexplored versus some other jurisdictions, and there's a number of reasons for that. Obviously, there's a lot of Amazon jungle. There's difficulty with infrastructure and access. But on the subject of infrastructure and access, with all the oil and gas that's being discovered, there's a massive economic boom in the country. And I think one of the other very, very positive aspects of Guyana is you look at their ability to get things done. So Oka West, from discovery to production, to construction, to go through that permitting side of things, which is the biggest time lag in the so-called safe jurisdictions in the world, like Australia and Canada and the States, it seems a very sensible government that really understands that investment into natural resources can generate material economic benefit. So you can get stuff done, and that is unbelievably invaluable, particularly when you want to take advantage of these record high gold prices. It is G Mining did a great job buying Reunion when it did. They look like geniuses. Obviously, they're very, very good. They've got already a proven track record, but they're very, very good at advancing assets on time and on budget, which is also one of the most difficult things to do. So as a jurisdiction, as a geological jurisdiction, I think Barrick made a mistake from exiting from that. And again, when you tend to walk away from something, we all do this. If we walk away from something, we tend to not go back. But it will be interesting to see what happens in Guyana. I mean, obviously, there's a lot of exploration activity. There's great discoveries being made. You can get things done quickly. I advise anybody, if you want to just see the mentality of that country, to Google the interview, I think it was last year, between the Guyanan president and the guy who on the BBC Hard Talk. He had one of the best comebacks where he was getting criticised for developing in oil and gas, and it was very, very good to see someone push back against this net zero narrative that hasn't necessarily been that helpful in terms of being supportive of economic development and ultimately acknowledging that cheap power is the key driver to the evolution of our civilization as we know it, but also to economic activity.
Absolutely, and that president was re-elected for another term. I can't remember if it was this year or the end of last year, but he's going to be there for several more years to come. Let's move across to nuclear power and uranium. Westinghouse Electric's Cameco and Brookfield Asset Management announced that the US government have entered into a strategic partnership to accelerate the development of nuclear power stations. The partnership will include at least $80 billion of new reactors to reinvigorate the US nuclear power industrial base. Nicole, this sounds like a big shot in the arm for the North American uranium sector. Who will benefit from this apart from Cameco?
Oh, look, there'll be you could argue there has already been these kind of mini bull markets in uranium. The incentive price has to materially increase. So you're going to see the uranium price go up. You've got this firm committed to the demand side of the equation. Where is this new supply going to come from? Because there is a big gap and a widening gap between primary production and forecast needs on the uranium side. Look, I think the whole world should go nuclear. The biggest challenge to that is the NIMBYism, and I think that is down to a lack of understanding of what nuclear power is. But it's the cleanest. It's actually one of the safest, even though people don't think it is. Far more people have died in building hydro dams than they have in anything related to any negative nuclear reactor event. And it's portable power, because you can build a nuclear reactor in the middle of nowhere and you can fly your fuel in, and you can't fly if you're on gas. You can't fly your gas in. You can't fly your coal in. Obviously, hydro and solar are somewhat, they're not capable of supplying baseload power with the infrastructure that we know today. We need a huge amount more investment on the battery side of it. So I think this is a fantastic signal. And the biggest challenge that the nuclear industry faces at the moment is really linked to cost, which is based on permitting. And so what you do need is a government, like we saw in the 70s when the French government, and you look on the stats on that, it's absolutely amazing. They made a decision that we need to not be reliant on oil and gas after the oil and gas crisis in the mid-1970s. And within a period of 20 years, where 75% of their power was nuclear. So if there is a government commitment to get things done and a sensible permitting regime, and then you compare that to the UK with Hinkley C, that's now projected to cost for one reactor over 30 billion. The timeline has escalated from 10 years to 15 years. And you look into that, that is NIMBYism, that is groups that are stopping what is critical power supply for a nation. That you can have these very small but well-funded anti-uranium energy, anti-nuclear reactor groups that can come in and can stop and negatively impact a country. And so what you do need to see is governments taking firm commitment and saying, we're going to push this through and push this through fast. And I think the US is showing that it's taking a leadership position in this from a global perspective.
Absolutely. I think President Trump has issued 4 executive orders that will all impact the nuclear space and the uranium space, accelerating permitting processes, etc., to enable more capacity to come on stream sooner rather than later. A substantial production gap is forecast in uranium. It's forecast to grow from about 51 million pounds through 2026 to 1.75 billion pounds through 2045, according to the Uranium Market Outlook. Nicole, where is all that yellow cake going to come from?
That's the big question. I don't think anybody actually knows, which means that the price has to go up. And when the price goes up, the explorers, the developers, and the miners benefit enormously. There is a lot of uranium in the world. It's actually a very, very common element. There's a lot of known deposits. Again, the challenge with developing uranium mines comes down to a lack of public support. And so it's up to, again, it's up to government. So Australia, for instance, won't allow any nuclear reactors in the country. But ironically, there is one. Nobody's aware of it because there's a medical nuclear reactor to produce medical isotopes for use in cancer, et cetera, in Sydney. Yet Australia is a pretty material uranium producer. And so I think it needs an acknowledgement of how do we produce, with expanding population, with massively expanding energy requirements, how do we invest in energy infrastructure that's reliable? How do we have security over our own energy infrastructure? And I think people have realized with all the geopolitical issues that are going on globally is there is a focus on how do you ensure energy security? And nuclear power is one of the best solutions to that, as much as it is probably not appreciated by the general public.
Okay, you mentioned that incentive pricing isn't there really, and despite the fact we've got this this production gap opening up, why aren't uranium prices responding more aggressively?
Because it's a good question, because I think it's a bit like the boy who cried wolf. The uranium sector it's going to get there. We have these mini blips in price performance and the world's going to go nuclear, and it never quite happens. And it never quite happens, I think, for all the things that we've just discussed. So I think the US government's position should provide comfort, because that's a government saying that we're going to commit real resources. We're going to build out our reactor fleet. We want to secure future supply. And the thing that you need to think about with price movement is reactors, utilities that own nuclear reactors, they're very, very conservative. And it's useful reading about those. And they have their fuel chain. They have that out for at least 4 years. So prices tend to jump when the end users, other than obviously momentum and investment momentum, but the end users are essentially the utilities as they're going through to build out, to get the raw uranium, and it takes about 2 years to go through the cycle to get the fuel in a format that can be used in the reactors. Now, because they're very conservative, they have very long-term supplies, it's when they start looking to reinvigorate their fuel supply chain. So you don't tend to see that price pressure. There's always a lag. So you need to, with all of these commodities that don't have as transparent pricing and as transparent markets, you need to understand how the end user thinks. And so we will see that price increase, because what happens, and we saw this last cycle, when utilities start getting concerned about securing supply, the raw cost of uranium is a minuscule component of the total cost of producing fuel rods for nuclear reactors. So the uranium price could quadruple, and that wouldn't actually impact their fuel price that materially. So they're fairly agnostic to uranium prices. So uranium prices can go up, unlike many, and there's nothing that you can substitute either. So if you're a nuclear reactor, you'll pay what you have to pay, and then that will potentially be reflected in prices. So we saw this behavior last cycle. It will happen again. And what really drove the uranium price actually up when it hit the top point, I think it was $127 a pound. That was actually a mining company buying uranium because it was sold short. It had to go into the market and buy. In that case, it wasn't utilities. But over the long term, it's tracking not just short-term pricing, it's tracking long-term pricing. And a lot of these companies will have contracts in place. They build the utilities very, very long-term pricing. So they'll have firm committed pricing out for 10 years. And so that's the other thing, is just because uranium spot price is moving doesn't necessarily mean that all companies that are producing uranium are exposed to that potential delta in the increase in uranium price.
And that's possibly why we've seen some uranium companies buying uranium rather than digging their own out of the ground. Let's switch to copper, where spot prices have hit record levels, the spot price moving to $5 per pound. Nicole, what has been nudging the copper price higher?
Well, I've sounded like a broken record again for the last 4 years. I think 2025 to me was always the pinch year, and I'm stunned that copper price hasn't moved. Well, I shouldn't be surprised, actually, because companies tend to be reactive and not proactive. Is 2025 year is it's a pivotal year in the copper sector. This is the first year that we're projected to see a shortfall in primary supply, and that shortfall is going to be exacerbated by the issues that we've seen technical issues at Grasberg, and some of the issues that we're seeing, the delay in QV2, and other issues that we're seeing in very, very material copper suppliers. So you've got a supply side equation, you have got declining primary production profile, you've got expanding demand for copper, you've got tariffs, you've got all of these things. And I think the world is finally waking up to the fact that the incentive price for companies to invest in building new copper deposit, it is not $5. I used to say it was between $6 to $8. I would say it's not $6 anymore. I don't think you've seen any large company put material investment into building big copper projects until the world is screaming for them to do so. And that will be at a price that's much, much higher than today. And again, from an investor's perspective, if I was a large copper company, I'd be gobbling up every single developer. They're still very, very cheap. Large companies don't do that. They tend to acquire things at the top, not at times like now where they could. So it's a pretty interesting space. And I think the copper supply demand fundamentals are exceptionally positive. But frankly, I've been saying the same thing for the last 4 years. So what do I know?
Well, we might start seeing some of that, because one company that's potentially missing out on this copper price bonanza is Glencore. In their results, their copper production is down 40% on their 2018 levels, which recalls to mind when CEO Gary Nagle said a couple of years ago that it's got about 1 billion tons of capacity it can bring online, but when the market is begging for it. Nicole, what do you think Gary Nagle is begging for right now?
Very, very high copper prices. I actually think he's one of the best CEOs of the diversifieds in terms of messaging. If you go back and look, and these are public commentaries, he's very good at saying the most almost rational pitch to why you would want to be exposed to copper, and build it when everybody's demanding it for us to build it. So they have a huge amount of embedded optionality and exposure to the copper price. But the thing to realize is, at the end of the day, all of these large companies, these diversifieds, they're run by humans that have KPIs, and they're not going to get rewarded. None of them want to take the risk of taking on a massive capex bill that you're likely to have delays and blowouts. And let's face it, a lot of large companies aren't managing these builds very well. We're seeing very material delays in QV2. Just because you're large doesn't mean that you're going to do things better. And so as a CEO, you go, why would I make that decision to build? Am I going to get paid more? No, I'm just going to take on more and more risk. So I think that as you step back and go, well, strategically it makes sense to own these assets and then hold them for that point in time where you will not get penalized for making a decision to take on that risk. So it's understanding the strategic thinking. And normally those companies will all make that decision at the same time. We'll all try and gobble up all of these orphans, these single asset developers who also, let's face it, aren't realistically going to make a build decision, but they're the ones that are interesting to be exposed to. And so I think there's a huge amount of potential uplift in the copper price going forward.
Okay. One country missing out on the copper price bonanza is Panama, which shut the Cobre Panama mine in late 2023. First Quantum Minerals said in its conference call that had Cobre Panama remained in operation since 2023, contributions to the country of Panama could have reached $1 billion to its treasury and $2 billion to local Panamanian supplier companies. CEO Tristan Pascal is notching up the pressure on President Jose Mulino there. This comment went viral in Panama and elicited response from President Mulino. The two sides seem to be moving closer to a position of being able to start negotiations about a potential restart. Nicole, will the world see Cobre Panama back into production anytime soon?
That's a tough one. I think a country like Panama, where Cobre Panama is such a potentially materially impact to your GDP, I don't know how you can over the longer term not have that come back online. So at the end of the day, when conflicts arise, and there was very specific reasons, obviously, for Cobre Panama to be shut down, is at the end of the day, companies have to understand that you need local support and you need government support, and you need to ensure that you are managing that risk as well as you can be. And so I think problems like this, they can be fixed. So it just is, you need to be making sure that you're approaching it the right way, that you're building trust with your local communities, that you're not letting outside NGOs come in with a narrative that is inaccurate or sometimes completely false. And you're also building those bridges with governments as well, and also allowing governments to make that decision where they're not looking like they will lose face. And again, to remember, at the end of the day, the regulators, the decision bodies that make decisions on approving mine permits and advancing projects, their life doesn't change if they say yes or no. It simply doesn't. And so if they think there's risk attached to that, they might lose their job or they might not get re-elected, they're not going to make those decisions in your favor. And so it's about companies going in and understanding again, I suppose, those individual incentives and how to make it as easy as possible for the government of Panama and for the local community to be supportive and to say yes. So I would say everything is moving in the right direction. It is a very, very material economic contributor. It is an asset that should come back online, and I would say that it probably will at some point in time.
Now, Cobre Panama, when it was operating, represented about 4% of global copper production. Assuming it does come back into production, what will that do to the copper price? Will the copper price fall back in that scenario?
I don't think so. I think that anyone who's looking at the sector rationally, again, it's a bit like gold, is people love momentum. People want to buy things when they're going up. They never want to buy them when they're going down, which is probably the time that you should be making those decisions. And so I think the move in the copper price forces people to look at the sector and then take a step back and go, hang on a minute. It's not just these short-term blips that we're seeing. We're the beginning of a very material structural gap between primary supply and demand. And this is a long-term primary supply story that's going to start playing out from 2025. So I don't think so.
Okay, Aldebaran Resources announced a PEA for the Alta copper gold project in San Juan, Argentina, with a base case 60,000 ton per day concentrator operation to process material from both open pit and underground sources. Alta will produce an average of 101,000 tons per year of copper equivalent for more than 40 years, following an initial capital investment of 1.6 billion US dollars. Nicole, Alta is next door to McEwen Copper's more advanced Los Azules projects. Does it make sense to build two mines here, or will Altar become a satellite potentially of Los Azules?
Makes zero sense to build two mines. This is one of those few examples of where you have this perfect M&A that is true synergies. Those two companies getting together would make an inordinate amount of sense because you'll be saving on basically everything. And to look at those projects as a combined part, as a combined whole, I think again, now's the time to be doing M&A in the copper space. There are the beginnings of bullish signals, but we're not in a bull market. The behavior, the investing behavior by corporates and the investing community isn't showing kind of the frothiness that we're seeing in the gold space right now. So it makes a huge amount of sense. Investors really want to see sensible M&A. Unfortunately, what often stops M&A, it's who's going to run Newco, or someone's going to lose their job, et cetera, et cetera. But that is an example of two companies that absolutely should get together. And in fact, I think what junior developers should be looking at is, and I think it'd be a fantastic marketing, a marketing strategy, is to say, we acknowledge that there is a material shortfall of primary copper supply when we're going to need it. And so we, the junior industry, we're going to get together and basically form a cartel of future supply. And you, the large companies out there that will ultimately come and want to own us, you're going to have to own us at materially higher valuations than we are today. And we're going to be, it's a super junior. So you have this concept that you create development company with no operating assets, but that has the size, the heft, and the liquidity to attract a wider range of generalists. And then I think you're in a stronger bargaining position in dealing with future M&A, which will absolutely occur. Can't predict the timing, but that's the direction. I mean, every single cycle goes through exactly the same patterns of behavior.
Aldebaran and McEwen Copper got a good boost a week or two ago when President Javier Milei did very, very well, better than expected in midterm elections, which means that his remaining 2 years, he should be able to continue to advance his agenda, which includes the development of the mining sector. Nicole, we've covered a lot of ground this week. Thank you once again for joining me today.
And thank you very much for having me, Paul.
And for our viewers, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.